All right, story time. The other day, I had a prospective client call me up and tell me a story of how he had lost $1.2 million. Now, the way it worked was he had met this girl on Hinge, they matched, and they started chatting it online, and they kicked it off. The girl then asked him to move the conversation to WhatsApp. And it started off relatively innocent. He felt that they had a connection. They talked about their dreams and their goals and aspirations, and he started falling for this connection. She started sharing about what she did for work and also how much she made doing this. She was a crypto day trader, and she invited this gentleman to invest in as well. And this happened over the process of a couple of months. Now, the returns looked great. The platform that she was trading on looked legit. So he decided, you know what, I'm gonna invest too. So he sold off some of his company stock to invest in crypto on this platform. So he kept investing more and more money into this, and he dreamed of the day that he could eventually cash out. Now, as he was looking at the platform, he kept seeing his money grow as the weeks went by. Buy himself a home, and also travel to meet this wonderful girl. When he looked at the platform on this app, it said he had over $2 million of account value from all of the growth, or so it seemed. As this was happening, he was still talking to the girl, and he was actually planning a trip to go see her. One day though, he had an emergency where he needed to take $100,000 out for his business. And he tried to withdraw his money, but he couldn't. Went through the app, tried to go through customer service, nobody was there. So he tried to reach out to the girl for her advice, and she ghosted him. He freaked out. I probably would too. And so he tried to call everyone. He even tried to call the bank where the money came out of, the Federal Trade Commission, the FBI, and even the local police. The FBI told him, after hearing his story, that he was a victim of what they call a pig butchering scam. He had lost $1.2 million of his own money. And it sounds crazy, right? Sounds a little bit ridiculous. The unfortunate thing is these scams are happening every day. I don't know about you, but have you received random text messages from women or even men that you've never talked to before? Have you had matches on dating apps and the match asked you after connecting with them to move the chat to a platform like WhatsApp? Well, these are probably signs of the early stages of a pig butchering scam. Now, if you've fallen victim to crypto scam, don't panic. Reporting your losses can help you recover some of your loss for tax purposes. So stay tuned in order to learn of how you could turn this misfortune into, hopefully, a tax savings opportunity for you. Hey there, friend. My name is Eric Niem. I run a full-service accounting firm that helps business owners and investors in the cryptocurrency space with their accounting and also their tax and tax preparation. I'm here to help you navigate the tricky waters of being scammed in cryptocurrency. Today, we're going to tackle a tough but important topic: how to report your losses if you've been scammed. Now, it happens to the best of us, but don't worry, I've got your back. Scams are unfortunately a part of the crypto world. From phishing attacks, pig butchering, to fake ICOs, it's unfortunately easy to fall into a trap. But here is the good news. You can report these losses and potentially save on your taxes. Now, in this video, I'm going to walk you through the steps to report your scam losses properly and hopefully get some financial relief. Now let's get into it. Reporting a scam loss is a bit different from reporting regular trading losses, but it's definitely doable. The main thing that we need to determine is, was the loss, the scam loss, was it for profit-generating motives? The reason for that is back in 2017, when Donald Trump was in office, they simplified the tax code and took away the ability to deduct traditional losses from casualties or thefts. Now, however, if the losses were because of profit-driven motives, we can still deduct them, just like we could deduct a Ponzi scheme loss. So let's talk about the steps needed to deduct this loss. First, you want to document everything. The first step is to gather all of your evidence and save it. Save emails, screenshots, transaction records, bank statements, any proof of the scam. Your documentation is crucial for proving your loss. Also, document the day and time that you identified that you had a loss. Step number 2 is prepare IRS Form 4684. This form is for casualties and theft. Now, the IRS allows you to report certain types of losses on 4684. This form can report losses from theft, which includes being a victim of a scam. You need to describe the event, the amount lost, and attach your documentation. Third, prepare your Schedule A, or itemized deductions. Once you've completed Form 4684, you'll transfer the information to Schedule A, which is used for those itemized deductions. Number 4 is a crucial one, is file a police report. This one is often overlooked but is extremely crucial. Filing a report with your local police department not only adds credibility to your claim, but is also required by the IRS. It shows that you've officially reported the scam to the authorities. And if I could recommend, file one with the Federal Trade Commission and the FBI. The 5th step is consult a tax professional. Now, these kinds of losses are a very complex area of tax law, and it's a good idea to consult with a tax professional like myself. They can help you ensure that you're following all the necessary steps to maximize your potential deductions for these losses. Let's take a look at a real-world example. I don't know if you remember, but in 2017 was the OneCoin scam. It was one of the largest Ponzi schemes in all of crypto history, and it turned out to be a giant pyramid scam that bilked millions of investors out of over $4 billion. Now, victims who documented their losses and reported them correctly were able to mitigate some of the financial damage through tax deductions. Remember, the key is thorough documentation and allowing the IRS to do the calculations as well as follow the IRS guidelines carefully. Now, it's important to know, and also unfortunate, that there's scams and pyramid schemes out there, so you should know how to protect yourself and how to write off your losses if there are any. Now, crypto scams can get extremely complicated, and so I recommend reaching out to somebody like myself to help you prepare and file your loss on your taxes. You can click the link inside the description if you have a question or wanted to reach out to me directly. Now, if you found this video helpful, make sure to give it a thumbs up and subscribe for more crypto content. Don't forget to hit the bell icon so you never miss an update. Do you have any questions about reporting scam losses or cryptocurrency challenges? Drop them in the comment section below and I'll be sure to answer them. Let's turn your bad luck into a better future.